webinar by the Emerging Markets Group at the PRCA, which is the Public Relations and Communications Association, the world's largest trade body for people in the PR and communications industry. The Emerging Markets Group started its series of conversations last year with something on Latin America, and today we are talking about Africa. The specific topic at hand is how to communicate growth stories in Sub-Saharan Africa. And to take part in that discussion and answer some questions and converse generally among themselves, between themselves, and I should be doing my best to provoke them into disagreement and to stating their minds very clearly. The three panelists we have assembled that the PRCA has got together are Mythri Sambasivan-George, who is joining us from Gaborone, Botswana. She's an advisory board member at Launch Africa Ventures. She's a founding partner of Vetri Consulting. All these guys, by the way, have got enormous CVs, which you can consult on the PRCA website. Mythri is a non-executive director at Stanbic Botswana, the bank, and she began her career with KPMG. And joining us from Geneva is Raphael Dana, who is the co-founder of Gozem, Africa's super app. I won't tell you any more about that because I expect he will. He's got a background in all sorts of industries, from investment banking to funds to web development and publishing. I was very interested to see, where I too began my career. And Joel Kibazo is joining us from London. Joel runs his own firm, JK Associates. His career spans journalism at the FT, broadcasting with the BBC, diplomacy, management, finance. He worked for the African Development Bank, and for a time was also the managing director for Africa at FTI Consulting, which is of course a major part of the PRCA and a firm that's done a lot to put this meeting together. So guys, we know who you all are. Just to get the conversation rolling, I'm going to ask about fintech. Now, I don't think we're going to talk about fintech throughout this session, but I've no doubt it'll be a major theme. But the first thing I want to point out is that one of the best known examples globally of digital disruption in financial services is M-Pesa, which I'm sure everybody watching this has heard of, that began in Kenya in 2007, I think, as a joint venture between a bank and a phone company. Now, since then, there have been hundreds of startups in payments, in microcredits, in savings products all over Africa. So I just want to ask people what they think, just while we focus on the financial services sector, how much of Africa's entrepreneurial energy is currently going into fintech? Joel, what would be your answer to that question?
Thanks, Christopher. I mean, I wouldn't know in percentage terms how much is going, say, for instance, into fintech, but I think it is really important to stress that the reason why fintech is so prevalent and so important is because, of course, of the size of the unbanked and the people who could not really easily access financial services for a very long time. Actually in most of Africa, not just any particular country. So in other words, you've mentioned M-Pesa. M-Pesa was actually invented for that specific reason. Basically, if you look, it was connected to the mobile phone, whose growth across the African continent was absolutely huge. Why? Because Africa had sort of not had telephony. And so what you did is what technology enabled it to do is to jump this stage of up the trajectory by using modern technology and helping people connect through the phone. Now, you do find that I think across Africa, it's about 70% connectivity that you now have. Many people have 2 or 3 phones, but in almost all parts of the continent, you do find that connectivity. So that the next thing was, with that connectivity, how do we get financial services to them? And so, banks, of course, did not go to rural areas and sort of things. So that is the reason you find that fintech has really become the sort of badge of honor for when we talk about technology on the African continent. I speak today on a day when I think Yoko, a South African fintech company that's in the payment space, has just raised $83 million, in its third round of financial savings. And why? It goes to the small and medium clients. That's their client base, and many working in the rural areas, not so much in the city. And so that tells you not only the history, but also the reasons why you find that fintech does tend to be very prevalent.
And that kind of straight to mobile thing is a topic specifically I'm going to ask you about, because that's a good example of where there isn't a legacy or an incumbent business. So it's an enabling thing for new businesses to launch.
Absolutely.
Mythri, I mean, how much of the story today is fintech? I'm going to ask about other sectors in a minute, but fintech does sort of present itself, as Joel has just said, as a sort of leading light in African new business, African entrepreneurship.
Yeah, so thanks a lot, Chris, and great to be with all of you here today. It's an amazing panel, and I really look forward to hearing the reviews afterwards as well. But I think, it's more today, particularly after the accelerator effect that COVID has had on Africa and digitization and digitalization, that it's more about digital inclusion. So in the work I do today with startups and looking at seed, pre-seed, and even pre-series A type of investment, sort of engines, we're seeing that even if it's not in financial services, it's a digitally enabled business, which then wants to bolt on some element of payments or financial services, even if it's microinsurance. So for example, I'm mentoring a startup in Nigeria right now, which is a pro-women startup. They are into network and community building, and they have a huge database. As you would imagine in Nigeria, even when you start small, it's relatively huge compared to the rest of the world by numbers. And they're now thinking of how can they introduce banking services. So they've partnered with the bank. So it's either, the reverse of that. So you go from digital inclusion to financial inclusion, or financial inclusion to broader digital inclusion. I would say it's one of the two. When it comes to financial inclusion and why it's been such a huge propeller, at least pre-COVID, I mean, if you look 10 years ago, Chris, 2011, thereabouts, the level of financial inclusion in Sub-Saharan Africa was about 23%. So 77% of trade or economic activity was in cash or some form of barter. Fast forward about 2017, so about 6 years later, that number almost doubled. So financial inclusion reached about 45%. And I'd wager a guess that now post the COVID accelerator effect, you're probably looking at over 50%.
I remember hearing from the Central Bank of Kenya, even a year or two ago, numbers like 85% there, which of course was M-Pesa's home, if you like. Okay, so Raphael, let me bring you in. I'm going to give you 30 seconds to tell us about your new business, because it is a very interesting thing, and it's very specifically not to do with finance, although obviously there's a money and commercial element to it. But after you told us about that, I'd just like you to address that point that Mythri has just made. Is the story for African entrepreneurs in any sector at all at the moment a digital disruption story, whatever industry they're looking at?
Sure. First, thank you very much for having me today. Pleasure. A few words about Gozem. Gozem is a really interesting company we've built in West and Central Africa. But just to give you a little bit of background, I've been in Singapore for 8 years before working in Africa. And we've been inspired by two companies who are really amazing. One is Grab and one is Gojek, and they call it Super App in Southeast Asia. And Southeast Asia is really interesting because you're going to see a lot of problems you see in Africa that exist and existed for a while in Southeast Asia, and have been solved by those two companies. So what we do at Gozem, we're a super app, but originally we're a mobility company. So we started with transportation, motorcycle ride-hailing, tricycle ride-hailing, car ride-hailing, and then we moved to delivery, and we've extended to the fintech. Our goal is we want to be a one-stop shop in the app, but the most important is we're building an infrastructure. And actually, I'll go on your question your first question on the fintech, and I'll go after the digital disruption, is I believe why everybody is moving into fintech, and all the numbers said before by Joel and Mythri are right, and why we're there, it's correct. But the reality is that we need fintech as an infrastructure. We need the payment. This is where it starts. So you can, if you come here as a startup, you arrive in Africa, you see people going around with cash, there's a bit of mobile money, and just thinking like, are we going to get this payment properly integrated in all our digital services? And this is why there's a lot of innovation to bring there. First part payment, so it's how we're going to transfer capital one-to-one, a remittance. I mean, there's a lot of aspect, and then is how do we lend money? Because there's not that much money for all the local population in Africa, so we need to lend the money to the population. To lend the money, we need data. So all of these are really an enabler for the entire tech ecosystem, because without the fintech, it's going to take too much time. So we need to start with the fintech to enable this. And in our case, okay, in the case of Gozem, we're a mobility company. So moving people is about infrastructure, moving goods is about infrastructure, moving money is about infrastructure. And on your question, like, is it about digital disruption? For us, Africa is not about digital disruption. Digital disruption is for the US, for Europe, because you have all those existing companies that's been here for like a long time with an existing businesses, and you're disrupting them. Today in Africa, it's about building the infrastructure, okay? And we're using a lot of the mobile technology and other type of technology to build this, because as I just said, we need payment, we need mobility, we need data, we need all of this. And this is where it starts now. And I think many companies coming to disrupt, you're disrupting the informal market in many cases.
Sure,
so
no,
it doesn't make sense.
That's a distinction, isn't it? It's not digital disruption, it's just digital. And that lack of incumbents again, that lack of a pre-existing industry or pre-existing companies providing the service is, of course, one of the ways in which Africa is open, distinctly open for new business. Joel, you agree with that? I mean, that's kind of what you were saying yourself, that it starts with digital.
Yes, absolutely. And the thing is this, Chris, what you really, it starts with digital, and then it goes on to it moves from fintech to other areas. One of the, as Mythri has said, that the accelerator has been this COVID situation. You see, I mean, I was last in Africa, 4 weeks ago. I was amazed at the level at which the motorbike taxi is now using digital payments, and they will not receive cash because of COVID. And, you could get all your vegetables and all your goods because you can then order online, and the shop picks it up. The auto driver will sort of get things to you, and at no point has cash changed hands. That was the most amazing that's the most amazing transformation that has happened, particularly over the last year. Now, the key thing about that is that you're bringing the majority of Africa's economy is in the informal sector, but by using fintech and all the instruments that has, you're bringing the informal into the formal, because you can now track payments. And then what happens from there is that the central bank governors and the governments are very happy about this, because of course you can now have your taxation base has absolutely sort of extended. So I agree with Mythri and Raphael that you start with fintech and then move on to, and this is exactly what has happened in this period.
But it's interesting, isn't it? Because what you're all really effectively saying is that fintech is an important business in and of itself, but is also a means to an end. And what you just kind of really unpacked, Joel, is that it's a means as much as anything to a political or social end.
Yes.
And, there are people who might take the view that that was quite disturbing. I mean, it's the live debate all over the world at the moment about vaccine passports. But it's interesting that you go straight to that political point, which is that one day the unbanked informal people, the next day become taxpayers because of their mobile telephones, essentially.
Chris, if I may say so, it is not, I completely agree with the way you characterize this, but it's not only that. The other thing that digitization or digital has done is in these things called ID cards. So that now almost everybody is getting identified. I went into a shop to try and sort of get another mobile phone, and they said, where is your local ID card? Now, without an ID card, I could not get another phone. So which means now I've been closed out. And then only when I produced an ID card, they said, oh, okay, you're from England, but fine, you know. So then they said, you have a local one. I said, no, I'm just visiting. So they said, fine. The key point there was that only then could I then have access to mobile money, because those mobile money services were not going to be loaded unless I produced a digitized ID card. So you can now see the connectivity right across society. So it's moved from fintech to the social, and as I said, going right across to many other aspects of society.
Yeah, and they'll have your voting records on it next.
Absolutely.
So, Mythri, let's step back a little bit from this sort of totalitarian vision that we're sort of sketching, and look at. I want you to tell us a bit more about what industrial sectors. I mean, we could even for a moment step away from digital, if you like. But let's talk a little bit about what other industrial sectors are ripe for new businesses in Africa. And then we're going to start talking about how to communicate, how companies can communicate those messages. I mean, there's one business I met a couple of years ago in Ghana, for example, fascinating business that does, through digital connectivity, delivers vaccines to cattle farmers in the middle of nowhere. So there's an agri-tech application. What other kinds of things are you seeing?
Yeah, I think before I even jump into that, one thing I'd like to say is to Joel's point. You know, the upshot of being included into the taxpayer system. So the benefit or the converse is that actually your data now around your activity is being tracked somewhere, be it in the cloud or some kind of server somewhere with your service providers. And with that data, you then become bankable, you become monetizable, and you become commercially transactable as an informal player, right? And I think that is what's hugely important. So what I do want to say before I answer your direct question, Chris, is that data is the hugest currency, I think, in Africa, particularly, and particularly because of where we were coming from, where there was so much that was in the unknown and the gray area. Now to the sectors that you were asking about that I personally feel are probably du jour. First of all is to say that of our 54 odd African states, no two are actually alike. There probably will be geopolitical similarities, such as in the East Africa or COMESA region maybe, or the West African region. And as Raphael will tell us, Francophone West Africa is very unified. And Southern Africa is so different as well. So we can't generalize, but I would say that for the most part, in most of these economies where at least 50 to 80% of our population are low and middle income earners, which is typically most of Africa, possibly with the exception of Botswana, it's a middle income country. It's your basic infrastructure. And I think this goes to what Raf was saying before, right? So access is huge. It's access to basic things like power, to clean water, to good accommodation, to decent education. It's not to say that these are not available even in rural or peri-urban African societies, but are they accessible and are they affordable and are they ethically, scalably and reliably being offered? And I think that's where the space to play is. So I'll give you an example. One of our investee companies through Launch Africa is called PowerMay. They recently pitched to my local Angel Network, brilliant group of people. And what they're doing is offering these home solar kits on a pay-as-you-go kind of basis. They're offering now credit on top of that, microinsurance, payment solutions, and they're bolting on even financial literacy through these things. And their uptake has been absolutely phenomenal. And this is in a country, as Joel said, in Kenya, or I think you mentioned, Chris, that Kenya has one of the highest rates of financial inclusion, lots of digital accessibility, but yet access to a reliable source of power in rural areas is still a gap. So I think it's in these kinds of key areas. Road networks are still not fully established into the rural areas, medical care, healthcare. And that's where you look at if, for example, Launch Africa, which I'm an investor into as well, they focus on agri-tech, health tech, ed tech, of course, fintech, but much more beyond that. And it's into these sort of basic necessities, I think, and making them accessible in an acceptably affordable way.
It's curious, isn't it, that all of our conversation so far has been dominated by tech and telephony-based tech and that kind of thing. And yet all of that, of course, is driven by electricity, and large swathes of Africa don't really have ready access to electricity. But
Yes.
Nonetheless, Raf, I'd like to turn to you, because I mean, your business, I know it has the sort of the tech base and the tech infrastructure and the fintech angle that we discussed, but essentially it's moving guys around on mopeds, as I understand it. But I'd like you, if you would, just for a moment to take us outside the digital world and tell us about a new business or two that you know about that is, let's say, a bricks and mortar kind of business, or a pre-tech business, or Mythri mentions roads. You can't have a digital road. What examples are you seeing of entrepreneurs launching successful businesses outside this?
So I think I will tell you about one example of one businesses we have, who's a brick and mortar business, but we fully digitalized, is our leasing activity. So today we lease motorcycle to our drivers, okay? And that has been existing, lending money to buy a vehicle. It has been there for decades, you know? But the beauty today is that we can lend this money to informal driver, okay? Today we have 0% default because we have data, and we've built a really strong process, and because we've mixed that with our ride-hailing activity, and we have 6 steps. I can go quickly on this, but as we identify the driver, as we KYC and investigate the driver, as we build the credit scoring and track the vehicle, collect the money, and manage the default, with all those steps that are fully digitalized, we're able to re-engineer a really old business. And before it was basically informal. You see the guy at the corner of the street, he would lend the money, would bring the cash every day, and now it's much cheaper. And because you're building this trust on the platform, and you're building this credit scoring, it's going to give you access to a lot more things. And for example, this really brick and mortar business is being completely re-engineered right now all around the continent. And we are the one doing this right now in Togo, Benin, and the Francophone area.
What's interesting, that strikes me, one interesting point about what you've all been saying, is that I keep sort of getting this echo in my mind of my old friend Hernando de Soto, the very world-famous Peruvian economist, who wrote his book about the mystery of capital, where the single most important thing for economic development was registration of property rights, de facto property rights over informal lands and things like that. And the argument there being, of course, that if you had that, then you had access to credit because you had collateral, and then the whole thing could spiral forward into development. And this is what we're really talking about, is another development of the same kind, it seems to me. Joel, we've talked with everything that everybody has said so far has been very, very benign. I want to talk a little bit about what are the main drag factors on people trying to launch new businesses. I mean, is it well, just focus on those two for the moment, because I'm going to come on to the reputational things in a second.
Sorry, Christopher, could you just repeat the question? I'm sorry, I missed it.
Sorry, I was saying, we've been talking about everything being very good. I just want to focus for a moment on what the drag factors might be on people launching new businesses. Is it lack of capital? Is it regulatory complexity? What do you see as the headwinds, really, that an entrepreneur faces?
I actually think that you mentioned the two most important things, which is the lack of capital, easily available capital and channels to acquire that capital. And sometimes there are actually, the capital might even be available, but have you done enough or put your company in the context that will enable you to access that capital? For instance, you may be sort of doing very well, but what do your books look like? I remember about 3 or 4 years ago, I was part of a team that we launched a series of this thing of looking at the next set of companies that were to come up into perhaps those that would eventually be invested in by the London Stock, African companies that could be quoted eventually on the London Stock Exchange. And that within that, the context was you needed 4 years of audited books. So in other words, you needed to at least show, yes, you might be very successful, you might even have capital, but our books audited. So capital is a key thing, but not only capital, it is about actually being in that proper framework so that anybody can then give you the next leg up if you're going to sort of succeed and grow your business. So capital is important. The regulatory framework is also a key thing, but in many cases, local entrepreneurs are able to navigate that. My issue is that they shouldn't have to do that. However, they're usually able, because they tend to be homegrown, they know how to navigate that. But it's much more difficult to get access to capital. And it's much more difficult for companies coming from abroad into, say, a local African market to be able to navigate that, through the regulatory framework. But many countries are trying through investment forums and investment departments to reduce the regulatory framework, to create a regulatory framework that enables one to be able to start their company. Of course, we know that Rwanda is up there amongst the companies where you can so easily do business. I think it's quite easy to do business in Botswana. And, so in other words, you don't have to go to 10 different people before you can get a license to start trading. You see, and much of that is now being the old level of bureaucracy is increasingly being done away with. It isn't yet completely off, but as Mythri said, you're talking about 54 different countries with different systems and different histories. So, you have the Francophone side. I mean, I used to live in Cote d'Ivoire. It's very different compared to, say, I lived in South Africa, I lived in Kenya. The systems are so completely different in terms of starting a business.
Yeah. Well, saving Raf's present, I have to say my own experience of doing business in, about 22 African countries. The Francophone countries tend to be somewhat more bureaucratic, might I venture that view. Mythri, let me turn to you because Joel has just teed you up by talking about audited accounts, and that's where you began your business career. And that's really taking us to the G part of the ESG story. Yeah. And there are questions over ESG that investors would have when they're venturing into Africa. And have you got properly audited 4 years of accounts is certainly one. But another point I want you to respond to is what Joel says. He was sort of slightly delicately talking about what in the Arab world they call wasta. And a little bit of clientelism, that locals know how to navigate the regulations, well, perhaps because their uncle is the Minister of Business, or they went to school with the son of the Minister of Finance, or whatever it might be.
A diplomat, Chris.
They know the way around. Sorry?
I used to be a diplomat.
They know, we all know how this works because we've all done it. We've all taken advantage of it, and we've all been victims of it, I'm sure. So. Yeah. Mythri, focus on those 2 points, the accounts and the wasta points, please.
Yeah, look, I mean, I think on the accounts, it's broader than just your accounting, right? Obviously, basic bookkeeping is the bedrock. And I can't count how many times we've dealt with startups, and it's an amazing team. They have a great solution, and they're fixing a real, pain point, right? So they've got a business which is a painkiller, it's not a vitamin. But when we then start doing due diligences, we find out that their books are not up to date. And this is normal, and it's because, it's the rate of change and growth and development and pivoting in a startup is just exponential, right? But I think, generally there is a low level of appreciation of how important good record keeping is, transparent records are, and disclosure of information to your would-be investors is. And unfortunately, then that tends to bite the majority of startup founders across most of the African countries I've worked with in the backside more often than not. So I think it's a gap in that sense. And you find that is why There are huge amounts of capital being poured into accelerators, even through government agencies from as far afield as Senegal. I know that they're working on an innovation hub that's going to create that capacity. Startup Bootcamp Africa, whom I partner with, work across the continent again into the various government agencies to help create this capacitation layer that then not only gives these skills about financial governance, but even strategy modeling and commercial decision making and commercial negotiations and so on. They try to build those skills into viable startups that have scale up potential. And the reason that all of this capital is being poured in is because that is a major gap area where there's so much potential actually to be discovered. I think on the WASTA point, as you said, and exploiting relationships, I think that's both good and bad, right? So to the extent that brown paper envelopes are not being exchanged, it's possibly okay. And I think without generalizing again too much, when I've been around Africa, the warmth with which you are received as a foreigner or visitor into other countries is actually something commendable. It's lovely. And I think that translates then into the fact that relationships need to be fostered, and they are actually important. So in my previous life in Lesotho, one of our greatest rules of thumb was, and remember, this is a blue chip listed company, so it wasn't a startup on a very thin balance sheet, but our rules of thumb as we expanded into every country were, you've got to get in there and find local partners, because the local partners not only know the lay of the land, but they have relationships on the ground. They know who to talk to in government. They know when a government regulation or decree is passed, while what is written in black and white is there, this is how to interpret it and this is how it's been implemented. Now, so I think that's important.
All of that's fair comment and falls under the general category of sort of business intelligence. And obviously relationships are important everywhere in business, but I agree, especially important in Africa, and there is that great welcoming sense that, you know, here are people bringing expertise or capital from outside. But Raf, I'm going to move on from that point, comment on what the others have said briefly if you want to, but I'm going to move on from that point because none of those things were really headwinds. I mean, you know, they're things that people can action themselves and can change themselves. The kinds of things that entrepreneurs certainly can't change themselves are the risk perceptions from, well, corruption certainly is one, but also conflict, civil warfare, terrorism. You know, Africa is not unique in being subject to those things, but they're certainly things that form part of the international view of Africa, to a greater or lesser extent, justifiable or not. So when you're looking for capital for an African business, as you've been doing, as you're doing right now in Geneva, how much do people focus on those things, and what do you have to do to counteract those negative views?
Sure, I think that's a really interesting question. But let's first talk about the fact before the perception. We operate, and I'll go quickly on those points. For me, corruption is just, it doesn't exist. It's your internal problem as a company. It's a question of discipline and policy. You know, if you decide that it doesn't exist, it doesn't exist. As simple as this. You know, so that's fact number one, and I think that's a really wrong problem. Then when you look about conflict, we have some conflicts in Africa, but this is not the continent. We have some countries where we have conflicts, but we have almost 1.4 billion people on the continent, and a large part of it are in countries where there's no conflict, and sometimes because of some political parties, history stuff, we think there's a conflict where actually there's not. And when you go into the main city, the capital, you see people happy in their shop, business is running, everything is free. So this conflict aspect, this corruption aspect, it reminds me always, you know, those cover of The Economist where you see a kid with a Kalashnikov and it's like Africa, the title, you know? That's what people think really from the outside, and that's what we really try to remove from the from the mindset. So on those 2 points, I think in terms of ESG, I think that the good part now is that most of the ESG money and the impact money of the world is looking at Africa. So that's really changing as well. So that's a really good trend we've seen in the last few years. And the poverty, yeah, for me, this is the opportunity. This is nothing negative. It's the positive thing. It's like we have poor people, and we need to change that. And we have impact money. We have a lot of huge organization all around the world, and DFI here to help that. So this is not something we should cry about. This is something we should be excited about, the opportunity to say we're going to move people out of the poverty. And I think so. Overall, on what I'm saying now, it's also on how do you communicate to people about the way you look at Africa. And this is really, really important when you talk to people. And it's true when you talk to some people, you arrive in New York, in Singapore, all around the world, you can have a really negative image. But as a pitch, this is what we try to remove immediately.
Yeah, absolutely. And communicating those stories is obviously something that people have to do themselves, but equally they can hire members of the PRCA to help them do. But Joel, let's come back to you. I want to know what we touched a little bit on this earlier on. What are the sort of unique characteristics of Africa, if there are any, that make communicating these growth stories harder? I mean, some of the things we've just talked about, but is there a different way in which growth stories need to be communicated, or in which investor relations needs to be done, or capital raising pitches need to be made? Is there anything different about Africa? You're on mute.
My apologies, the bane of my life being on mute. I'm not so sure, Christopher, that there are different, that there's something unique about Africa per se. What I would say is that in terms of communicating those kind of stories, the first thing that I think one needs to be considered is that in terms of almost right across the board, in the businesses, the entrepreneurs do not tend to have communication as one of their key points. And that's because they don't yet see it as a necessary part in going to the second or third level of growth. You see, because you start in your local market, you're doing quite well, and then, and you succeed. And then people get to know about you. So communications tends not to, they may have marketing as something that they do, but communications and actually preparing the company, the profile of the company, tends to be low down in that nexus of things that must be achieved. So that is something that I think anybody going in must be aware of. And even if you're preparing, say, for instance, for financing, and I mean, I've seen this in a number of cases where you have to say, well, right, okay, let's get the narrative. What is the narrative that we have to sort of mold here? I mean, it's all there, but can we at least put it together properly so that an investor can understand, one, where you've come from, the conditions in which you're operating, what is the route to success, how do they get their money back? And that to be able to understand those 4 points, sometimes it's not that they don't understand, but they haven't needed it. So in many cases, they haven't really followed that. When you talked earlier about the sort of negativity that there may be about Africa, I think, you know what, much of that is sort of dissipating and going, partly because there are other parts of the world that are seen as troublesome, be it sort of Afghanistan, be it Iraq or whatever, so that the focus on Africa has not been as great. Now, of course, we've just seen pictures of Cape Town, of Johannesburg, parts of Johannesburg and Durban being set alight and so forth. And that in one of the continent's biggest economies and perhaps the most sophisticated economy. So, you know, where actually you would not have expected that kind of thing, see? So in other words, you know, and what you might have expected in a much more lower developed economy is what you're getting here. So I think some of that is dissipating. I do think you do need to put some political and social context when you're doing these things. I was in, just before the the pandemic spread, I was in Houston, where I got asked the question, so tell me, you know, what goes on in Africa? And I thought, okay, what does that mean? And what was refreshing was that I said, okay, what have you heard? He said, well, no, I just don't know anything about it. I know that I'm going to put a few millions there, but I don't know anything about it. So what was interesting is that they did not come out with, oh, it's full of war, or it's full of A, B, and C, but they just wanted to know about it. And so I was sitting and I said, well, it's got these challenges and whatnot. And is, you know, and to Raphael's point, what was interesting, they said, oh, so you mean, is it like 15 years where Asia was 15 years ago? I said, well, something like that, 15, perhaps 20 years. They said, oh, that's all right then.
Well, it's a somewhat simplistic view, though. I mean, when people talk about Asia, it always amuses me because, you know, Saudi Arabia is in Asia, and, you know, so is Israel. And, you know, do they mean, when people talk about Asia increasingly, well, 30 years ago, people really meant Singapore, Malaysia, Indonesia.
That's right.
And now they really mean China. But no, but I take your point. But these
Southern Asia, so, you know, Southern Asian countries.
What are the sort of main planks? If you're having to sell Africa to begin with, before you even start talking about your cash flow projections or your brilliant ideas, what do we start talking about? I mean, certainly we talk about a growing and aspirational middle class.
Middle class, yes.
Urbanization. More and more people want to send their children to schools. More and more people want to be in the financial services, beneficiaries of the financial services industry, as we've discussed. Simple, you know, kind of demographic shifts like that are incredibly important parts of the attractive story. Mythri, what are your sort of top 3 favorite things that you would say if somebody asks you, you know, if you meet the guy in Houston who says, what's going on in Africa, what are the top 3 things you point to?
Look, I think the first thing is just, which will never have been a change factor for at least the last 20 odd years, is you've got 54 countries to choose from. And if you are picking companies that are scaling and scalable, then it means automatically you're looking at businesses that will have diversified their risk, right? Because they're not going to be concentrated even in one region. And even as we've said before, within the regions, it's a huge melting pot. So you will be able to diversify quite a bit of your risk, currency-wise, economically-wise, trade-wise, and even just size of the market by playing and dabbling around Africa. That would be my first thing. The second is this often touted point about, so we're, you know, wherever we are, 1.2 to 1.4 billion people today, but by 2050, we would account for, what is it, more than 2/3 or so, or a quarter of the world's population, somewhere there. They're crazy numbers, right? But that is where the buying power could and should lie in terms of the rising youth, the talent that will be there. It's explosive, the talent across Africa, and it is completely untapped. And now that we, you know, COVID again, wherever there's a downside, there must be an upside. And I think COVID has helped us unshackle ourselves from a lot of these old ideas about brick and mortar type of businesses and connectivity. And now what will happen is you've got this huge talent pool sitting across this beautiful continent, this diaspora that is so diverse and can be accessed from anywhere in the world, right? And they've got really dynamic ideas that are speaking to real world problems. I'd say that maybe the fourth thing for me though is that, and this is maybe not so much answering your question about what's exciting, but what do comms people miss, or what should they take note of, is, you know, Joel mentioned we saw these very troubling scenes of rioting in South Africa. If a comms person has been working in South Africa for even the last 2 years, they would tell you, and indeed the last 20 years, they'd tell you that tribal conflict and unrest post-apartheid has been simmering forever. And if anything, the gap between the haves, the have-nots, the increase in those living at or below the poverty line is only worse in recent years. So this was something that was coming. And that's the point I wanted to say about the comms story. You know, you can't, certainly like Joel said, to bring in a comms professional just before you're going to do your Series A fundraising round, for example, is probably a big mistake. You need to bring your comms professional in before you're even really fixing your strategy roadmap, quite frankly. But B, they need to be somebody who, or a team or a unit like FTI Consulting, I know was in my Letsejo days, had satellite offices around the continent and also bridged out into the developed markets, right? Because that's the only way you can translate the real world grassroots issues of the countries you're operating in Africa to the ESG focused first world sophisticated investor who's looking for a 10x return.
Sure. Raf, I mean, just as an aside, without wishing to delve into the politics of any particular country, I would not be in the least bit surprised that South Africa was the least stable country for a host of reasons. And it, notwithstanding the sophistication and size of the economy, if somebody came up to me and said, where would you invest in Africa, Chris? South Africa would be about the 30th country I'd mention probably, but I don't wish to offend any of my dear friends in South Africa. But Raf, I want to pick on something that Joel kind of teed up. He said, so you launch your business, you're in your country, in your market, you know your home market very well, you've got everything sorted out, and you know that's easy to see. So, but what you have done is launch a transnational business. Now, admittedly, the CFA zone, let's focus on that aspect of Francophone Africa, is unified by currency, which clearly helps. But how many transnational stories are there? And is a country's sort of frontiers quite a big barrier to business expansion in Africa, perhaps more than it is in other parts of the world, Latin America or Europe, for example? Because you have to break out of, you're in Tanzania and your business is great there. How do you move that into other countries, neighboring countries, or even the ambition of a Pan-African company? How's your experience been on that, and how do you see others managing that problem?
Sure, a really interesting question. I think first we can look at how the market is structured, at least on the tech market, and you see some like clusters of country, and obviously you have all the South Africa on one point, you have all the East, the Kenya, Tanzania, Uganda. Then you have the West and Central where we operate, and the West and Central is divided in two parts. You have the Anglophone and the Francophone, who are quite different. And then you have the North Africa. And generally, you're going to see some startups around our size, the one are going in multiple countries, they go in one of those regions, generally. And you'll never see one going, say, I do a bit of Kenya, and then I go to Ivory Coast, and it doesn't make sense. So they tend to evolve in those specific areas. In our specific case, about Francophone, where it's really interesting is that we have one common language, obviously. But as you said, the franc CFA is really interesting for one main reason, is because it's pegged to euro. So for €1, you get 656 CFA, if I'm not wrong. And that's really good, especially in our lending business, because we don't have FX risk and FX cost. So we have a really stable currency for investors. And at the same time, the legal environment is quite similar in all those countries. So we always give this a really funny example when we talk to investors. We always say, opening a new country in Francophone is like opening a new state in the US. And I think that's pretty right, because we have new things to do. We need to reincorporate the company, a few things, but at the end, it's not something major where we're completely changing environment. Most of the partner telcos, petrol company, most of those key companies are almost the same in the same area. So it's, for us, it has been built from the beginning. From day one, we knew that we're going to go to multiple countries. Obviously, we started with Togo. Togo is 8 million people. So we wanted to build like a really big tech company in Africa. So Togo was really interesting. But from day one, we knew that we're going to expand. Then we went to Benin. We've already opened Gabon. Our next country is going to be Cameroon. But it's true that as we open more countries, it's becoming easier and easier. We need to adapt few processes and other area of our businesses. But the Francophone is one of the most interesting one, because it's where you're going to find the most similarities, I would say.
Yeah, well, certainly that's true. But I mean, Joel, to you, a kind of similar question. I mean, the Francophone African, West African countries, CFA zone is obviously a straightforward example to understand. But can you see Pan-African, let's really turn up the ambition, can you see a Pan-African unicorn?
Yes, and it will be one that will sort of but yes, there will be a Pan-African Unicorn, but it will be one that knows how to navigate the various areas, you see. And that's because, for instance, I mean, we talked about the CFA, the currency, the CFA, and in East Africa, they're trying to do the same thing, you see, where, you know, to somehow move the slowly ebbing to what used to happen in the 60s and 70s and have a single currency between Kenya, Uganda, Tanzania. And now they're trying and moving slowly towards that. So what I'm saying is that I don't know if you will ever have a sort of, even if you were to have a Pan-African unicorn, it will be one that has to still operate between East, West, and of course, North Africa, again, which is very, very different, you see. So, and that's what I meant when I said it's about navigating, you know, to know where you are. But let's say, the one thing I'd say is, Africa is not unique. Until the euro, we would have had a similar situation in Europe. So let's not sort of, and that had been, those were economies that had been there for hundreds of years, if not thousands of years. So, and yet they managed to operate somehow and build, and all those countries build successful economies. So I'm not so sure why in the case of Africa, that should be, you know, we should need to have a model that unifies it before any success can happen, or for any corporate or any unicorn to be successful.
Mythri, do you have a comment on that? Are national boundaries barriers to business expansion?
Not at all. I mean, look, my previous employer was, by all accounts, a Pan-African unicorn.
Yeah.
So, so let's say Ho Holdings Limited, while founded in tiny little Botswana with 2.3 million people, I think when it was founded in 1998, we probably had 1.9 million people, so even less. But over the next sort of 10 years, when we drove our Pan-African diversification strategy, we ended up in East and Southern Africa. Certainly, we eschewed South Africa for obvious reasons. But for a financial services retail organization, it would have been too competitive. But then we went into West Africa as well. And as we speak today, it has a market cap of, well, now it's about 2 billion pula or so thereabouts. When I left, let's say, Juan, at the height of it, our market cap was averaging around, and that's about 200 million US dollars. But it was a more than double of that, right? So in those terms, I think you could say it was effectively a unicorn, and it is possible. As Joel said, I think the question is, how do you navigate on the ground? So if you look at the likes of fintech players today, Flutterwave has a valuation of somewhere around $500 million US dollars today, and no doubt is going to just ramp up from there. It's in something like, I think, 11 African countries. And that includes obviously Kenya, Nigeria, South Africa, and then Ghana. But there are 7 others that it's in that they have gotten into through partnerships and those kinds of strategic relationships. So I think it's possible. And the question is just your route to market and who you work with on the ground.
Sure. I'm sorry what that noise seemed to come from me, but my email is closed. I absolutely promise. Raf, in the last few minutes we haven't talked very much in detail about the actual business of communicating messages. We talked about the sort of content and the sorts of messages that people need to communicate. But I mean, when you launched your business, for example, the current business, I know you've launched many businesses, what were your sort of go-to-market strategies in terms of comms? I mean, was social media a huge part of it? I imagine it was. But tell us a little bit about the actual detail of how you delivered your messaging, both to customers and potential customers, and also to partners and investors.
Sure. I think from day one, we went really into a 360 communication strategy. So we knew that our customers were using a smartphone, obviously. So the usual suspect channel as Facebook, Google were used from day one. And we've built like a really clear strategy on the social media and the paid advertising on that part. PR has been really important in our company. Every time we launch a new service, we do something new, we push PR, because for one simple reason, and I think every startup, especially in countries where it's not too busy by tech innovation, media loves innovation. They love it. So you'd be surprised every time we push a story, we always get quite good coverage. So that's really important. And then, yeah, we did 360, we did some billboard, we did some radio, we've built some really good local content. So that's how we started since the beginning. And we adapt our strategy. Now our strategy is really localized. Our city managers are the one really like running the show and deciding what they want for every city. We have a national layer and we have a global layer. So we have different type of messaging all the way, and it goes even in digital channels, like really on the mass media, up to what we publish on LinkedIn about our strategy, because talent acquisition is really important. So we do a lot on that part, because we want to attract talent all around Africa, and a lot of the diaspora, a lot of Africans in the US, in France, in Canada, to join our company and come back to Africa to help us build Gozem.
So people who've gone to those places maybe to get degrees and so forth, you want them to come back and bring those skills home. Can I just ask you one detailed question, if I may?
Sure.
Without giving us the numbers, when you sort of put together your pre-launch budget, what proportion of it, percentage terms, did communications and advertising make? I mean, how much of your outlay were you allocating to that, just in percentage terms?
Sorry, percentage of what? Of our revenue?
Percentage of your, no, well, if you like, percentage of your revenue, but when you looked at your total costs in year one, for example, year one post-launch, let's say, year one post-launch, what did you allocate in your budgets to communications and messaging?
I think you're asking me on the first year, but it should be around something around 10% on top of my mind.
So a sizable chunk.
Sure. Knowing that we have one advantage in the Francophone market is that not that many people advertise on all the digital channel. So not many people are really bidding against us. So you can get really attractive pricing on Google and Facebook. If I would be in Lagos or I would be in Nairobi, I'm sure I would pay a ton more money.
Yeah,
So,
no, I'm sure that's true. Mythri, we'll turn to you second to last. We'll leave Joel to the last. Specific ideas on communicating, whether communicating to investors or communicating to customers. What's your sort of favored channel? What are you highlighting at the moment when you're advising your investee companies?
I think so. It definitely depends on the demographic, right, that you're dealing with. But by and large, just by virtue of the percentages involved here in Africa, if you're communicating with your customers in the market, it's social media, and it depends. Of course, in Nigeria, for example, we found that Twitter was far more popular than Facebook. Facebook and Instagram are huge in Southern Africa, by contrast, and Facebook is huge in Kenya and East Africa. So it depends on the demographic and the markets you're in. But I think, you've got to work on the digital channels there. And then I think with your investor community, it's a lot more, obviously during COVID, impossible to have met, but a lot more important to actually meet face to face with your investors. I don't know how Raf's been managing it, and it'd be interesting to hear it. Some of the investees that we talk to who are sitting in Finland or elsewhere in Europe or in Singapore or in the US, especially Delaware and so on, it's been virtual so far. But when you're doing really big rounds and you're talking to the people who write the big checks, I think face-to-face cannot be replaced. And hopefully now with a post-vaccine environment, that will start to resume again. And there it's important because we've got to, and we said this before, educate some of our international investors about the realities of Africa, including, as you said before, the drag factors, but also then the reality on the ground about where the opportunities lie and what not to worry about, Yeah. So I think that's what I would say.
And you're right. Not only do you have to go and see them face to face, you need them to come and see you. You need them to come and see Africa, and maybe they'll be surprised on the downside and on the upside. But let's make them actually see what's really happening and what is meant, well, by launching a new business in a huge, thriving, exciting, populous city like, say, Lagos, for example. I mean, a city I fell in love with when I first went there, and I must have been there 30 times. You just, the whole place just sings to the tune of people buying and selling things all day long. It's an amazing entrepreneurial culture. Joel, last word to you. Do turn your microphone on, but tell us, your sort of one killer piece of advice to an entrepreneur launching a new business. What's their common strategy got to entail?
I would say in the last few seconds, segment the market. So in other words, use the tools you'd use in any market when you're thinking about a communication strategy and you're starting to plan. So segment the market, because it will be a different segmentation process. But if I was, say, sitting in London or Paris, or or somewhere like that, compared to, say, maybe if I was sitting in an African country, they're the things that you need to be dealing with are things like rural versus peri-urban, urban. We talked about the digital thing. There's still quite a lot of people who now have mobile phones, but the numbers who have digital units that can maybe easily access Twitter, whatever, will be different, maybe are still slightly lower than those that are elsewhere, but you can still reach them. Thirdly, look very much to use local media. Now some of that will be analog, will be newspapers. Some of that will be in local television channels, because of course you're also communicating in different languages. So do not just assume that it's going to be French or English, to get your message across. So in other words, I would say use the tools you'd use in any communication strategy, but then apply them to the local situation.
Joel, very good advice. Thank you very much. And Portuguese, of course. Let's not forget our friends at Los Angolanos in Mozambicanos. So thank you all very much indeed, Joel, Raphael, and of course, Mythri. Great to hear your views and your comments and all of this, and benefit from your experience. I think we have almost to the second run to our allotted hour. So thank you very much for that. And thank you for your brief intervention. Who knows where the PRCA Emerging Markets Group will take us next? Maybe it'll be to Central Asia or to Central and Eastern Europe or some part of Asia. Who knows? But please do join us for that. I hope you enjoyed this session wherever you may be and whenever you're watching it, as I said at the start. And thank you very much indeed for your kind attention. Thank you. Goodbye.
Bye-bye.
Thank you. Bye-bye, everyone.
Bye-bye.